Today's Animal Spirits is brought to you by our friends at YCharts. Michael, I was on YCharts this morning. You know what one of my simplest features is for me? I'm thinking of looking something up and I'm doing some initial research. Just the search function. You type in whatever you're thinking about looking for, and a million different things pop up, and you can say, oh, I want to look at that. No, I actually meant that. Just a treasure trove of information on YCharts.
You said Trevor Trove.
Treasure trove?
I like it. No, let's stick with it. It's a Trevor Trove. That's a new one.
I did reach out to a friend named Trevor recently, so tons of stuff. My dashboard is great. I got the stock market dashboard, fixed income, asset classes, U.S. economy, real estate.
Not to brag, but I know my dashboard puts yours to shame.
That's possible. What do you have that's better than me, though, on yours?
I've got my 52-week high list, the low list, biggest gainers. I got it by asset class, by sector. Don't worry about what I got. I have a lot more too, but it's proprietary.
Okay. If you want to get your proprietary dashboard from YCharts, go to YCharts.com, tell them Animal Spirit sent you, 20% off when you sign up for your first subscription with a company. YCharts.com. Welcome to Animal Spirits with Michael and Ben. Let's do a little plug here. You know what? I want to talk, before we do this plug, I want to do something that I don't think we do this a lot, but this is just a podcast thing I noticed. If you talk about anyone, a brand, a person, someone in your life, any podcast, you have to say shout out. Hey, shout out to my fourth grade teacher, Mrs. Smith, right? Shout out to that guy who said this. I think we need a new term for the shout out. I'm sick of the shout out on podcasts, right? Because that's what everyone does. Everyone, right? It's a
all right, well, you know what?
Sure.
I didn't know we were doing shout outs, but shout out to the guy at every wedding who has a ponytail. Right?
True ponytail or Rets? So that guy's always on the dance floor first, probably.
I was at a wedding over the weekend, and there were several ponytails, but at every wedding, there's at least one older gentleman, not casting judgments, but there's at least one older gentleman with a ponytail, and I respect the hell out of that guy. So shout out to him.
He's sweating on the dance floor at some point.
Yeah, of course.
Right? Okay. Here's a plug. Here's a shout out to The Unlock. This is our advisor-only YouTube channel and newsletter. So it's advisorunlock.com. We wanted to create content that's specifically for advisors because we know that's a big part of our audience, but we know it's not for everyone.
Yep.
Right? So we're going to be ramping up the content there. Josh did a talk with Michael Kitces recently. You're going to be talking to Meb Faber coming up. I talked to Cerulli Associates' Sean O'Brien.
We're leaning in.
Yeah, we're leaning in. Lots of interesting stuff for advisors there. We're going to be sharing stats and data and research. It's going to be fun. So check out advisorunlock.com if you're a financial advisor and want to learn more.
All right, another plug. Sorry, it's a season of plugs. We have 3 financial advisors in California. It's not enough. We need more. We are overwhelmed with the amount of people in the great state of California, which I'm in right now, actually, who want to work with us, and we need help. We need more advisors. If you're an advisor in California and you want to know what it's like to be an employee at Ritholtz Wealth Management, please, hiring at RitholtzWealth.com. And in fact, there's actually, you know what? I'll do you one better. I'll make it easier. Link in the show notes. Because there's another role that we need. This one's a little bit more specific. Our tax team is ramping. We have 1, 2, 3, 4. Do we have 5 people on the tax team now?
I think so, yes.
Okay. We need more help. Everybody's in Philly. So again, a little bit of a more targeted pitch here. But if you are in tax or looking to get into tax, specifically we're looking for operations help, but we're always looking for tax filers. I guess that's a CPA, or what's the certification? I can't remember the certification outside the CPA. Enrolled agent. We're looking for you. We need help. If you're in the state of Philadelphia, the city of Philadelphia. Sorry, see, I do know my geography. The state of Pennsylvania, the city of Philadelphia. Reach out, hit the link. We need your help.
We need more CPAs in the RIA industry.
Yeah.
It's true, right?
Yeah.
All right. On to the show. From Sam Rowe, friend of the show, we estimate the S&P 500 will deliver an annualized nominal...
Whoa. It's a VIA.
What?
It's a VIA.
Yeah, this is via Goldman. I was getting that.
Okay.
So from Goldman, Sam is the best aggregator of Wall Street research. Would you say that? Is that fair to say?
He has his finger on the pulse, so to speak.
Great chart here. He has the distribution of returns from the S&P. And so Goldman estimates the S&P will deliver a nominal return of 3% during the next 10 years, which is the 7th percentile since 1930, roughly 1% on a real basis. I don't think they get into what the whole reasoning behind this is, that being their baseline. I don't know if it's
It's got to be mean reversion. Right?
Valuations, mean reversion, yes. Maybe this is more like the GMO style of things. So I decided to look at this, and I looked back and said, okay, how often does the S&P actually give a return of 3% or less annualized, going historically? We have the data from DFA going back to 1926. So I ran this. I created the initial chart, sent it to our chart kid, Matt. Listen, he's a young buck. He's got a ton of energy, but I beat him to this one. He said, I was going to create this chart, but you beat me to it. So I still got it, man. Even though I'm a middle-aged guy.
You made this? You didn't make this. You didn't make this.
I'm sorry, I made the chart. I told him, here, format it for me.
Okay.
Get it? So I found 9% of the time we've had annual returns over a 10-year. I did rolling 10-year returns for the S&P on a monthly basis. 9% of the time, it's been 3% or less. But you can see the only times it's actually happened are, we're talking 1930s, Great Depression, 1970s, very small amount of time. It would have been worse if we did it on an inflation-adjusted basis, but Goldman's is nominal. And then the Great Financial Crisis. So the only times this has ever happened historically, 3 times, it's basically been 3 of the worst economic environments of our lifetime. So you would have to say, sure, mean reversion, but this would have to be probably some sort of financial crisis to cause this.
So here's what's not going to happen. I think it's improbable that we would get 3% returns merely with low annual returns. It's, at least historically, and it's N equals 2, but nevertheless, the idea that the stock market would just sort of meander and get 3% seems unlikely. It's likely to happen in a period where there's a really bad bear market. Would you agree with that?
There has to be there has to be a catalyst.
Okay. So if I had to guess, what would potentially be the thing that would cause the market to have this 3% return with a really nasty bear market in there? I would say it's the deficit. And I think that Are you saying this with a straight face or not? Straight face. Because you sound like my Twitter replies from last week. Straight face. Not that I think it's going to happen. I'm just guessing if there were to be a bad catalyst. And I think you and I and others who are dismissive of the deficit are dismissive for probably a good reason. It's like literally the people have been crying wolf. It's the boy who cried wolf. For 70 years, people have been worrying about the deficit. But it doesn't mean that there's not actual wolves. So I don't know how to handicap how dangerous the deficit exploding is, so I'm not saying this is likely. In fact, I would say it's unlikely, but I don't know. If I had to guess, I would say, what would you guess? Like a meteor? I don't know.
No, there just have to be some sort of financial crisis. And I don't see a financial crisis on the horizon that you could forecast.
Well, how would you? Isn't that by definition, how would you see a crisis coming?
There were people who forecasted
the GFC.
People forecasted the GFC crisis. And a lot of people who forecasted it have been forecasting the repeat of it ever since. It hasn't happened.
True.
But I mean, let's handicap. You're a probabilities guy. What's a percentage of the deficit and the federal debt actually leading to a crisis in the next decade? I would say it's 10%, maybe. Pretty low for me. Oh, you think that's high? I'd say that's pretty low.
I've been giving betting odds. I would say plus 790. A lot of our audience are not degenerates. So I'm going to convert the plus 790 talk into a percentage. So I would say, I don't know, 3%. I don't know. Is that reasonable?
Yes. So that's very low.
So in that case, it would be plus. I'm making this up. Plus 2,600.
So I don't know. But that means that. Yeah, so it means it would have to be something else. Remember, a couple weeks ago, you brought up the fact that the rolling 10-year returns and 5-year returns aren't that high historically. So I looked at this. This 13.4%, this is through the end of September, annual returns over the past 10 years, puts it ahead of 62% of other returns in that period. So it's in the top 2/3, but it's not like this is screaming highest 10-year returns we've seen. It's just been pretty good.
Here's another potential downside catalyst. AI just doesn't do what we think it's going to do. That would do it, right? Or that could do it.
Yeah.
Given how much market cap these companies command, if it doesn't bear the fruit that we think it might,
So the question is let's assume this for whatever the reason. We're not going to guess what it is if this happened, but if we did have mean reversion for whatever reason, so what do you do about it? That's the thing. So one person say, well, you sell everything, you go to cash or whatever. The logical person, me, would say you diversify. Yeah. Because I agree. Maybe to your point, AI, the boom and bust, that's probably a much higher percent of risk. Even if we do get AI being everything everyone wants, we're going to get a bubble and a bust out of it. If it is, that's the bigger risk.
I would say we're 10 times more likely to have a bear market caused by an AI bubble than a deficit blow up.
So here's another one from Goldman that looks at the level of market concentration versus equal weight outperformance. I don't know
What
if
is
this is
this? I
some
saw
sort of
this. I saw
form-fitting
this chart
graph.
floating around. What is this?
All it shows is that as market concentration gets really high and then peaks, equal weight tends to outperform after that concentration happens. And so
Okay.
I think this might be a little bit of torturing the data here, but I think the point probably stands that if you're so worried about market concentration being the risk, then you diversify into other factors. Equal weight, mid caps, small caps, value, quality, dividends, whatever it is. And I think that's the answer. If you're really that worried about low returns, that diversification is the answer.
Uh-huh.
Probably not the answer everyone wants to hear, but that's the simple answer. Here's my question. Seeing all these charts and stuff, where's the euphoria? Right? The economy remains pretty strong, in a good place. The stock market has been going gangbusters for a couple of years now after we had the 2022 bear market. Sure, there's some speculation. It doesn't seem like there's a lot of euphoria.
Nvidia?
I guess Nvidia, but has like the election year thing just totally drown out any ability for people to have euphoria? Like, it doesn't seem like anyone is like cheerleading the stock market right now.
Well, because the election is sucking all the oxygen out of the room. Understandably so.
Okay, I guess with a great run we've been having in the stock market, it just doesn't feel like everyone's like, all right, everyone in the boat. It's
Also, people don't we don't cheerlead bull markets anymore. Nor should we, right? Like, I don't think it's responsible to I think it's probably a good thing that there's still a wall of worry.
That's true. Even in the 2021 meme stock craze, I don't know. Everyone knew it wasn't going to last. It wasn't like everyone was like, all right, this is the. I feel like that is another thing that died with the 90s. The dot-com bubble, when everyone was feeling so good about the markets and everyone was just rip-roaring.
Yeah, I think that's over.
I don't think we can have that. You can have the speculation and the high valuations and such, but I don't think you can have everyone cheerleading it, right?
Yeah.
And
which is good, because that was not good.
Yeah, not really. Speaking of Nvidia, here's your. So this is your euphoria.
Great tweet. Well. I think,
or maybe not.
I think this is fundamental value. I think there's fundamental justification. 1 year ago, this is from Beth Kinding. 1 year ago, Nvidia was estimated to generate $79 billion in revenue in fiscal year 2025. Now, Nvidia is estimated to generate more than $125 billion. So fundamentals have been outpacing even the enormous share gains, or at least keeping up, whatever. Very impressive.
This company is a unicorn. It's a one of one.
It's a one of one. Here's another great chart. I forget who this was via. Oh, this is also Goldman. Goldman Sachs estimates Microsoft is scaling. What's CY25? Something year? Is that current year? I don't know.
Got me.
Okay. Microsoft is scaling 25 and 26 CapEx faster than hyperscaler competitors. So they're estimating Microsoft to spend, what was the tweet here? Damn it, I didn't put this in the notes. I don't know, $85 billion in a few years spend on CapEx. What?
So, but isn't how after the fact there's always
that's where the euphoria is. It's in corporate balance sheets.
Corporate spending, which is funny because they're just investing in their businesses. That's the euphoria. Tech companies are investing in research and development or whatever. I don't know. That sounds pretty good to me. I guess one of the things is after the fact, then when a bubble bursts or whatever, the bull market ends, people always look back for this was a sign. Remember, it was American Mortgage or something. There was some mortgage company that reported earnings 2006, and everyone's like, oh, that was it. That was a canary in the coal mine. Isn't it this time, whenever this happens, whenever the bull market ends, it's going to be an Nvidia earnings release or something? And everyone will look back and go, that was it, right? That was the thing.
I'll tell you where the euphoria is.
Oh, calendar year. Duncan sent us to a calendar year. Can't fool us.
Oh my God, that's embarrassing. Shame on us. Okay, listen. Imperfect. We're not perfect. I'm bald, so clearly not perfect. Here's where the euphoria is.
Speaking of plugs.
Here's where the euphoria is. I asked my ticket broker this morning. I said I shudder to ask, how much is it to get into the World Series? $1,500.
That's a starting rate.
I said, okay, I'm probably gonna sit this one out. I don't know. I mean, that's wild.
Do you care about baseball? I can't see you being a baseball guy.
Not really. So I grew up a big Yankees fan, and I just got bored with it. I stopped watching I stopped watching probably in like 2010, 2011. But like it's a World Series. I want to go. I grew up a Yankees fan.
Yeah.
But that's a bit steep.
All right. So remember when we were talking about how we were just kind of guessing, like, hey, once the Fed cuts rates, is the stock market going to be a sell the news moment? Is that too obvious? I think we kind of had that discussion, just laying it out there and just talking about it. It's kind of funny that rates were the sell the news on the cuts. I think Joe Weisenthal created this. It's mortgage rates when the Fed cut. I think you could put any rates on here.
Yeah.
Treasuries, whatever. The Fed cut and mortgage rates went up. I think mortgage rates are back at 7% almost, which is just insane to me. We'll talk about that in a little bit. But the rates were the sell the news moment. So let's say the Fed does get back to, people keep talking about the neutral rate is 3%. I don't know if it's just going to be, Fed's going to find everything easy and it's going to get back to 3% and everything's fine, or they just have to overshoot. But let's say 3% is the number. Doesn't it just make sense that the 10-year should be at 4, 4.5, whatever it is? Doesn't that make sense historically?
It does. But on that topic, so the past couple of weeks, we were talking about like a really nice bullish backdrop for equities. I'm taking that off the table now.
Oh, okay. That was quick.
Listen, when the facts change.
Wait, why? What's changed?
The very quick acceleration in the 10-year.
So you think rates going up makes it, but aren't rates going up because the economy is strong?
Yeah. Yes. Nevertheless, I think that I'm just saying, like, from the stock market's perspective, we were in like a Goldilocks environment with more Fed cuts on the horizon.
All right, we needed rates to come down to help make the stock market narrative
or stay where they were, not to go from 3.6 up to 4.2 in 3 weeks. Like the game has done changed. So, like, is the Fed going to go next time, or are they going to pause?
Boy, you're a momentum macro trader.
Listen, I go where the puck is.
But are you worried because borrowing rates are higher now, and that's not going to help consumers? Because that'd be the biggest worry for me right now. Which is interesting, because wouldn't that mean I feel like I'm like the guy in your Princess Bride meme you always talk about, like, but if rates go up and people can't borrow as much, isn't that bad for the economy?
Never
so
fight a land war in Asia. No, listen, I'm not. All I'm saying is that it was like very accommodative environment for the stock market, and now it's not. That's all. I'm not like predicting anything ugly, but I'm just saying like I'm less bullish than I was 3 weeks
ago. The stock market was pricing in lower yields and they didn't come.
Yeah,
I think that's fair. All right, The Economist wrote this special report, and this is the cover is just great. The envy of the world, and it shows the dollar rising, and it says America's economy, a special report. And they wrote like 7 or 8 different articles all about how basically the U.S. economy is kicking everyone's ass. We're the richest nation in the world. We have more productivity. We're energy independent. There's all these charts that I put in here.
I'm not a magazine indicator cover guy, but The Economist does have a dubious track record with these types of things. So would prefer not to see this.
So they talk about, they go through this point by point, saying how we've left every other developed economy in the dust. We have a bigger share of economic growth. We're more productive than all these other countries. Again, energy independent. Our financial markets are by far the biggest, best, and most liquid in the world. They had this stat that to be in the top 1% in the UK is a household income of like $250,000. In the US, it's more like $700,000.
Whoa.
That's crazy, right? And they kind of go through all this stuff, and they say, and the final piece in the special report is the only thing that could stop us is toxic politics. They're saying that's the only thing that could stop the U.S. train. And maybe to your point, that's how the deficits get us. Somehow the politicians can't figure it out. They spend too much, or they don't fix anything, or they break something. Here's how they end the report. There will, of course, be downturns, doubts, and drama along the way, but if you want to bet America, the economists will gladly take the other side of the wager. That's kind of where I found, that's where I fall on this too.
Yeah.
I think getting back to the negativity thing, like, I feel like we're not celebrating this stuff as much. Like, the U.S. economy is crushing the rest of the world. No one is even close to standing in our shadow.
Okay, yes.
There's
however,
no one.
But a lot of it is like mega cap tech. And I think that a lot of the
I don't buy. No, that's the market. So everything else, though, the economic growth, you really think that's all from tech? No.
I do. I don't think that our like GDP is going gangbusters.
We're gonna be at 3.2%, but it's also we have.
But listen, I think so. I think the reason why people get mad at us for reporting the good news is like, listen, it's true that for asset owners in this country, people have never been wealthier. It's also true that for people without assets, inflation has hurt, even though real wages have done better. And I think here's something, and this is not an original thought. I can't remember who said this, but I think that people get mad at us and others for reporting the good news because they feel like they have a moral high ground. To be like,
there's a lot of that with the internet.
You guys are so insensitive. Yeah, you're doing well, but how about the rest of us or the little guy who's not keeping up? Like, I think they feel they have the moral high ground when they say that. And I understand that sentiment, even though I think it's annoying, but I get it.
I also think those people need to read a history book too, because in the Great Depression, 2% of people owned stocks in this country. Now it's 60%. 40% of people owned homes back then. 65% of people own homes today. Like 2/3 of the country does own financial assets. It's obviously concentrated in the hands of the few, and it's still inequal. And the Economist even says, listen, the biggest problem in the U.S. is inequality. Like they compared us to all the other economies, and guess what? Our inequality is the worst too. They use like the Gini coefficient, which I don't know what that means. P.S. That's a name you don't hear much anymore. I think
Ginny?
both of my
Ginny
grandmas.
or Genie?
Well, both of my grandmothers were named Virginia, and they're like my one grandma, her nickname for my grandpa was Ginny. That's a name you don't hear anymore, Virginia. But that was like a 1930s-ish name.
Here's another name you don't hear anymore ever: Hyman. You know, so my grandfather, my great grandfather. So I'll get to this later in the show. You know what? I'll get to that later in the show.
Okay, good character in The Godfather. So they do. The Economist even talks about this: the fact that inequality is the worst, and they kind of ask the question: could we be the biggest, most baddest ass of all economies if we didn't have inequality?
No,
and I think it's an unfortunate byproduct.
Capitalism and inequality are like peanut butter and jelly, unfortunately.
Yes.
Like it's one of the downsides to the upside is that wealth gets concentrated.
But my whole point is read a history book. There's never been a period in history.
Nobody cares about history.
When everyone has been lifted up. This is the most people that have been lifted up. And think about it. We've been pounding the table on this for months. The people on the lowest end of the income spectrum saw the biggest gains in both wealth and income in this cycle. And no one talks about it. No one cares.
I think if you'll allow me to quote myself, people don't compare themselves to their ancestors, they compare themselves to their neighbors. So nobody cares.
Obviously, we don't
nobody cares
compare
about
ourselves to other countries either. We don't compare ourselves to other countries either.
Nobody cares. Nobody cares.
But I got someone from Turkey responded to a tweet being like, I can't, like, if we had the economy you guys had, like, I would be so, because they have like hyperinflation there. Like, they have true problems, economically speaking.
But this is part of it. Things are so good that all we have, I don't want to say that. That's ridiculous. All right, let me reframe this. Complaining is like part of our national pastime. Like, we love to complain.
It is.
Matter of fact, let's just go here for a sec. So, Buco Capital tweeted and then deleted, I guess, this tweet, because I guess the responses were just so annoying.
See, what I do is because I did one of these soft landing tweets and it went crazy and got 10,000 likes or something last week. And once the gremlins come into your I just mute the conversation. You have to.
So Buco Capital tweeted something like, or he quote tweeted and said, so the original tweet was, I have a friend who him and his wife make $3 million. They show me their spending. It's 70.
I saw that.
Did you see that? Okay. And Buco quote tweeted, he's like, listen, if I had $3 million in income and I ever complained about anything financial, like I'd stab myself. You know, something like those were the sentiments.
Yeah.
And so somebody replied to him, and I never thought about it this way, but okay. Somebody replied, all these I have a friend shit posts are just engaging farming, period. Definitely. Online lonely adult version of a 5-year-old playing house with their imaginary friends. So it makes them feel temporarily better, more important, less insecure. So this person's thinking like, dude, all of these fucking stories
they're not real.
Not even real.
I totally agree with that. I think 90% of online videos aren't real. I think they're like staged.
So
I don't believe any of this
stuff. The idea that somebody can make $3 million, and I understand that they might feel like, holy shit, I'm in a pinch because I'm spending so much money, right? My worry, my this, my that. Fine, I get that part of it. But what asshole would dare say that out loud?
Right.
Like that, keep that shit to yourself, idiot. So I do think that this person's retort was fair. Like, it's just engagement farming.
Yes. There's definitely a lot of that. Right. Do you think anyone really goes through their whole family budget with friends? Like, we spend this on this, and no one does that. they don't know either. No one knows what their actual budget is.
Oh yeah, and it got so granular as to like how much they spend on food and this and that, and I don't buy it. Sorry, not buying it.
I agree. Put a bow on this. I am a glasses half full guy, so I probably look through most things with rose-colored glasses. But I do think it's okay to celebrate when things are going well. And I feel like no one will do it this year because it's an election year. But I'm willing to say, like, things are pretty good right now. They're not going to be good forever. They are pretty good right now, and people are going to be missing this economy when it's not here anymore someday.
Here's more good news. According to Gas Buddy data, the median U.S. gas prices dropped to $2.99 a gallon.
I paid $2.88 this weekend. Not bad.
By the way, here's another point. So that's the national price. I'm here in California, beautiful Coronado Island, and I saw gas prices for like $5.90. So I think a lot of this like discourse, it's like we're talking like aggregate national stuff, and everything is like very much segmented. The nation is not homogenous.
It's true, but we live in a homogenous time being online.
Yeah.
So it's a weird dichotomy.
All right, I think Mike Zicardi tweeted this from Bank of America. We expect 13% year-over-year earnings growth in 2025 for the S&P 500. Okay, great. Well, I mean, holy cow.
We'll take it. All right. So, but this is the concentration risk is that how much of that growth is coming from a handful of companies.
Yeah.
Right. So yeah, that's the downside. All right. From the Washington Post, we've talked about this a little bit, but I wanted to pull out a few things in this data that we haven't talked about before. So they looked at median net worth by age adjusted for inflation. Before anyone asks, this is inflation adjusted. So they did millennials, Gen X, boomers, and silent generation, when did we go from the greatest generation to the silent generation? Who decided to make that? Were boomers sick of being told their parents were the greatest generation, didn't want to call them that anymore? Right? Like, are they going to change? Are our grandkids going to change our name from millennials to something else? Anyway, so they look through 2019, millennials were lagging pretty much every other generation. And now we're at the same age. And now we're way ahead of any of these other generations in the 35 to 39 age range. Gen X is also ahead where baby boomers were. Here's what's interesting, though. Look at how the silent generation peters out like immediately. Like that whole generation died young.
Yeah.
Because, I don't know, they all smoked 2 packs a day, didn't take care of themselves, whatever, had never heard of sunscreen, whatever. Look at how much the baby boomers just keeps going up the older they get. That keeps going up, and it's not rolling over. And also, again, Gen X is way ahead. So this was a one-time shot in the arm, I think, as far as housing prices, that all this stuff happening at once. But we've never seen anything like the baby boomer generation be this large with this much money, live this long before, and their wealth is just going to keep going up.
Yeah. So we'll get later in the show to some of the wealth transfer, and we'll rehash the conversation we had last week about the guy complaining that his parents weren't giving him money. So, all right. So my dad asked me if I would, speaking of the silent generation, my dad asked me if I would take a drive to the neighborhood that he grew up in, a place called Far Rockaway, which is in Queens. It's like on the border of Queens and Nassau County. So my dad grew up, I would say poor. I don't even think like lower middle class is like fair. He grew up poor. And he grew up in an apartment complex. And his grandfather, imagine this, his grandfather, Hyman, who people called Henry, that's my middle name, that's where I get my middle name, which I hated growing up.
Really?
Shared a...
I like Henry.
Well, now I like it. But my dad shared a bedroom with his grandfather from the time that he was 11 to 17. Can you imagine?
Yes, that is the thing that doesn't happen anymore. You don't get those kind of stories.
And it was by no means a big bedroom. Like I think there was a bunk bed in there. So this is
as a
the
teenager.
stock
Can you imagine the teens of today taking that?
No. So this is the stock that I come from, Ben. This is my heritage, my lineage. So Hyman was a tailor. And so when we pulled up to the building, my dad showed me that this was the bus stop where my dad would come home from work every day. So my dad's dad worked in a department store, like just a bunch of random odd jobs. And so we were driving around, and my dad said he didn't know anybody that lived in the house. Like that was like people with money. Everybody that he knew lived in the apartment complex. And I said, "Did you feel poor growing up?" And he said immediately, no. Like immediately, it was no. Did not feel poor. So we're driving around, and then I guess he thought about it, and he said. He just like 5 minutes later said, I didn't feel poor because I didn't know what rich was.
Right. He knew everyone else around him was living in the same type of environment, right?
Yes. So And I think that my dad's experience is pretty normal of what it was to grow up in the 60s. And just, again, my dad saying I didn't know what rich was. They didn't they were living in fish bowls, right? So there wasn't all of this access to the outside world.
Right. They didn't know it. My dad would always used to joke, and I think it was tongue in cheek but half serious. He'd always talk about how they used to have to rent presents for Christmas. And I think his implication was always that we never got anything because he grew up with 4 other brothers and sisters. And my uncle still lives in the house, and it's a tiny house. I can't imagine having 5 kids in this house. But yeah, again, that was a lot of people grew up that way, and I think that's why you always get the intergenerational battles because listen, I struggled, I did all this, and that's the same thing with the millennial boomer thing that we were talking about.
Yeah, but my dad was like, no, I had, we played ball outside in the lot, we played steep ball, we had pizza, we went to the movie theater. He's like, he didn't have presents and stuff like that, but didn't feel poor because he didn't know what rich was.
Yeah, and he couldn't be on social media all the time seeing other people flaunt their lives or whatever, right?
Yeah.
It's interesting.
So yeah, the generational divides are stark. And then of course our grandparent, my grandfather was in Africa in World War II. It's just the generational divides are comical how different our upbringing was compared to our parents and their parents.
Yes. My grandfather lied about his age to get in the war at age 17 in World War II. It's, that's a whole other...
Yeah, and here I am. I have a ticket broker.
Right. That you talk to once a week, apparently.
Okay, so there was a tweet, there was a tweet. Somebody tweeted, the end of shrinkflation. Tostitos is adding more chips to bags after sales decline. And I think one of the things about the shrinkflation that really, really pissed people off, it's yo, we're not f***ing stupid.
Right.
We know what you're doing. There's more air in the bag and fewer chips. It's so insulting.
Yes. Right. Just raise the prices. Yeah, I agree. That's always really bad. When you open it up and it's just, tons of air.
Oh, anyway, one more thing on this. So my dad brought over, so this is Friday, we spent the day together, and my dad brought over a box of my stuff from growing up. And so it was nostalgic, take a trip down memory lane, see pictures of me as a kid and stuff. And then I saw some of my report cards. I didn't share this with you, right?
No, you shared a few things, but don't think that.
Okay. So I was talking to my dad, and I think about my childhood a lot in terms of how I treated my education. And I think this is just a nature versus nurture thing, because I grew up in the same house as my brother and my sister, and they did not behave the way that I did. I was a little bit rebellious. I don't know if that's because my parents got divorced and it was a subconscious thing. I don't know. But I didn't give a shit about school at all. Was completely not motivated by grades. And I just had this inner delusion that things would be okay. That I don't worry about it. Don't worry about it. I'll be fine. And my parents were always disappointed that I was underperforming my potential, but they didn't know what to do because also I have attention issues. So I don't think that there was any environment in which I could have thrived in school. So I saw this one report card. Now, in fairness, this was my senior year, so I was already admitted to the Kelley School of Business as an undergrad. Not to brag, it was top 15 at the time because I did well on my SATs. But listen to this report card.
You were pre the days when every kid gets taken to a doctor to diagnose ADHD or whatever.
Correct.
Right? It was before those days existed, kind of.
Yeah. So I never did my homework. I was never able to pay attention, obviously. Not a shocker to the audience, I don't think. But I did well on my SATs, and I did well enough in college to get into the Kelley School of Business as an undergrad. So, all right, so post getting into college, all right? So I was already in. It's my senior year. These are the teacher comments. More effort needed. Difficulty with subject matter. Inconsistent effort. Low test grades. Not working up to ability. Work is satisfactory. Frequent lateness. More effort needed. Inappropriate class behavior. I sent this to my friends and they go, which one did you have satisfactory? Because that was the only mildly positive thing. And that was phys ed. Another friend of mine said, 13 absences. I can't imagine why you had difficulty with the subject matter. So it's okay to laugh about this now because, obviously it turned out okay, even though it could have not turned out okay. I don't know what the was wrong with me. I have a hard time. I think about this a lot, what was wrong with me, but I just think I just didn't have the constitution to do well in this classroom environment.
I think about the nature versus nurture thing a lot, especially because we have twins. So I feel like I'm watching an experiment play out in real time. And it's bizarre because I keep falling more and more to the nature thing, and which is a weird place to be as a parent. But I think for some kids, there's only so much you can do as a parent, I think. Right? Like I'm sure your parents tried a lot of stuff to get you to do it, and some kids just don't respond.
So my dad said, he's like, he said, like, me and mom spoke about you like all the time. Like we didn't know what to do.
Yeah.
And he said, like, what are you gonna do? Because my younger son, Logan, like he's an angel. He's not gonna have these issues. But Kobe is like my son. And he said, like, what are you gonna do if not God forbid, but if he has these sort of issues? And I said, I don't know what the right answer is. Because if my parents, and I got grounded a lot for like, bad behavior and stuff, but if my parents pushed me harder, and they did like try it, but like if they pushed me hard, I would have like dug my heels in even more.
Yeah, you would have pushed back.
So I don't know what the answer is, but
yeah, I remember I had a friend I have a friend from high school who married an older woman who already had some older children. And he talked about disciplining one of the young kids, kept getting in trouble and trying to discipline him. And he said, we take away everything, we punish, we have consequences. And he said, whatever, the kid doesn't care about the consequences. So how do you punish someone who doesn't care about the consequences?
That's what I was. Like, I was grounded the entire 8th grade.
Right.
And I just didn't care.
Yeah. So, but to your point, as a parent, that's you want to do everything you can, but at a certain point, you kind of go, you hope they figure it out someday, and you obviously did. It just took longer than your parents probably would have hoped, right?
So my parents always did trust that, and I'm obviously sad that my mom didn't see this, but they trusted I would figure it out, and like it took a while, obviously, but holy shit, I was a disaster.
Late bloomer. That's okay. All right. So this, I feel like this is from Eric Palchunas, introducing Battleshares. And you can pick companies. I guess you go long one, short one, and it's like Nvidia versus Intel, Tesla versus Ford, Amazon versus Macy's.
I guess you
these. See, so to me, this is the sports gamblingfication of markets, right?
Yes.
This is, I'm going to pick a winner and a loser or whatever, and there's just going to be ETF parlays now, I guess. Is that where we're heading?
That's exactly right. So there's like a hard line of people that think like this is garbage, toxic, this is not investing. Jack Bogle will be rolling over in his grave. And
these things will probably be huge.
Yeah, I don't know. I'm not sure about that. I understand why people feel that way. I think that I am just more like, this is gambling. And again, I don't know that you should, but it's like, but people are having fun. And I know investing shouldn't be fun, but nobody's doing this in their 401k. Nobody's going all in on this stuff. Like, it's people that are probably for the most part being relatively responsible with these products. Do you think that's fair?
I read the stories about sports gambling and how it's the worst thing to ever happen and it's going to ruin people's lives. And I don't know. I feel like the people who are going to have their lives ruined would have it ruined by something at some point anyway. I don't think we can protect people from themselves at all costs. It sounds like a really bad way to look at it.
The Jack Nicholson gif. You're coming over to the dark side. I know it's like it's an uncomfortable thought to have, but.
So listen to this one. This was in the Wall Street Journal. I've never heard of this guy before, but the story was really good. So it's Archie Karras, a gambling legend who made and lost a fortune, dies at 73. And they talk about how this guy showed up in Vegas with $50 to his name in the 1990s. He borrowed 10 grand and he basically doubled and doubled and doubled his money until he got to 40 million bucks. And he said he did it playing like craps. And so there's a story about him. And it says he was up 35 million at the Horseshoe one night. And this is one of his friends, a famed poker player, said, I saw it all in the box. And he said he walked up to him and said, Archie, do you know what an annuity is? Basically being like, cash out, man, you're good. And it said people tried to talk him into like investing his winnings and taking some money off the table. And he said he just couldn't do it. And he basically lost all of the time. And they said it took him longer. It was faster to lose it all than it was to gain it all. And he said in 2021, he said, I tried to invest my money, but I'm not an investor. I'm a gambler. That's who I am. That's my personality. So it was like the things that made him win that money were also the things that made him lose it. And that's just some people's mentality, right?
Yeah.
If you have that gamble, you can't walk away. You like the what is it from the Heat? The action is the juice.
So I'm a gambler. Now, thank God, like in my 401k, I don't do anything, right? Like I set it and forget it. But I think that a lot of people, listen, it's hard to say a lot of people, who knows? It's individual. But I think that people hopefully are able to compartmentalize, okay, this is my gambling account, right? Like I'm gambling, I'm having fun. And yeah, it's probably not going to go well like financially, but I'm having fun. And then this is my responsible retirement money.
I think we all know people who have just an addictive personality, whether it's smoking or drinking
Hand
or
up.
drugs
Yep.
but you've figured out a way, but there are people who literally can't control it.
Yes,
Like they have an
yes.
addictive personality and that's just what everything for them is all in or nothing.
Yes. All right, Ben, I got an email last week. This is pretty cool from Gmail. Like, who is this person? So I scrolled over their name and Google said their birthday was 2 days ago. And I say that to say that's just like one tiny, tiny thing of where this is going. Like some of the stuff that we're going to see over the next couple of years is going to blow our faces off.
Well, I saw the video of the new Facebook glasses where you walk by a person and then you'll hit the button, it'll scan and tell you everything about them.
Dude, I need that. We all need that. So I'm here at Stocktoberfest.
We do not need that. That sounds awful to me, but that's where we're going because people just share so much information that.
Okay. I saw two people that I'm like, I know, I have to know their name. Speaking of this, I'm not going to share that story, actually. I don't want to get myself in trouble. But there's people that like you should know by their name and you don't.
Oh, yeah. Well, I'm like this with all the parents at the different I'm like, who's that guy the dad too? And who's she the mom? My wife knows everyone and I know no one. Who's that guy I was just talking to? I don't
the
remember
story that I'm not going to share is the one that I shared with you about calling the person the wrong name.
Yeah.
So I coached my first flag football game this weekend, and I got the text. So I'm like the third coach. I'm on the sideline. I harangue the boys, and they don't listen to me.
You're basically the guy who stands behind the coach, pulling him back if he runs out to yell at the ref.
Like, guys, if you're not standing with Coach Mike, you're not getting in. And they're like, Mike, you got to do a better job. I'm like, So, so I got the text like, hey, you're coaching on Saturday. And I'm like, uh-oh. I've never
like
coached.
You're the head coach. Okay.
Yeah. Both of the coaches were out. And it was only, so a lot of the boys, like half the team is on a baseball team, like a travel baseball team, and half the team is not. And you can imagine half the team that's not, like Kobe, my son, are not the greatest athletes.
Right.
So we were completely underdogs. We had to call up two people. So it was 5 kids that I know, 2 strangers versus the second best team in the league. And I was nervous. Like I didn't tell Robin, but I was actually nervous going into this. I was like, anyway, credit to me. We were down 14-6. We scored a touchdown and the ref called like shield guarding, flag guarding. And then so it was working. We were getting down. It was 4th and goal twice, so we didn't convert 2 times. Down 14-6, stopped them twice. And one of the boys on my team goes, hey, I want to be the quarterback. So I'm like, but it's working. We're doing well. He's like, but I want to get a chance. So I'm like, okay, but if it doesn't work, I'm going back to this boy. First play of the game, first play of the drive, pick 6. Now we're down 21-6. I'm like, all right. But I have a lot of sympathy now for the coaches because when I'm on the sideline and they're in the huddle, I'm like, what's taking so long to call the play? And now that I was in the huddle, it felt like it was 2 seconds to get the boys to like even look at me and pay attention and line up.
Little boys are animals. I talked about this on Ask the Compound last week. Like you tell them everything you're going to do in the huddle, then you break the huddle, then you have to tell each person individually at the line again what they do because they don't listen.
Yeah, and there were so many places where I'm like, all right, run to me. Yeah. And I'm like, dude, I said run to me. You literally ran the opposite direction.
See, here's my plan as a flag football coach. If I ever was one, you put the boys in literally the same spot every time. You don't do any reverses. You turn and hand it off, and that's it. You make the simplest plays ever.
You know what? Credit to me. So it was quarterback, get open. And we ran that play like 8 times in a row. I was like, again. Right. We just kept running the same play, and it was working.
Yes, exactly. Keep it simple.
All right. Let's do this crypto stuff real quick. I know we're running long here. So Nate Garasi tweeted nearly $1 billion into spot Bitcoin ETFs in the last 2 days. For context, only 8 out of the 560 ETF launches in 2024 have taken more than $1 billion this year. So I saw a tweet from Hodl Capital saying the most frequent question I get is, who is selling Bitcoin? And interestingly, it looks like the mega whales, the people that have, these are the addresses that have 100 Bitcoin plus are buying the shit out of Bitcoin. The sellers are the 10 to 100 Bitcoin. So that's anywhere from, I guess, is that 600,000 to 6 million?
So you didn't make like buy an island kind of money, but you made enough money where it's like, okay, I need to take some off the table here.
Yeah. So it's like not the whales, but maybe the dolphins that are selling. A16Z did a State of Crypto report 2024. And the big takeaway for me, anyhow, was just stablecoins. That's like the killer use case, I guess, for now. Stablecoins are only a decade old, and now they're a top 20 and rising holder of US debt. That's kind of wild, right?
Huh. Interesting. Yeah, that's like the Trojan horse to get people in, right?
They
So
showed the cost to send US dollar internationally, $44 for an international wire transfer, and it's less than 1 cent now on one of these L2 platforms. And then lastly, they show stablecoin activity has grown despite crypto market cyclicality. So they show a spot crypto trading volume, and of course, it went parabolic into 21, crashed during the bear market, has come back, and stablecoins have risen and risen and risen, completely uninterrupted by the ebbs and flows of the crypto market. And then lastly, yesterday, Stripe just made their biggest acquisition ever. They are buying a stablecoin platform company called Bridge for $1.1 billion. So the shit's getting real there.
So volume is still pretty low. I looked at IBIT is the biggest ETF, the iShares one. It's $27 billion roughly. The Fidelity one is $13 billion almost. So I was way wrong on this. You were right. I was wrong. Credit to you.
Thank
on
you.
ETF flows. All right. Piece from the Wall Street Journal on home prices. They talk about builders offering buy downs still. They give these stories of people coming in to buy a house and be like, listen, I can't borrow for 7%. And they talked about how a builder offered someone 4% for the first year, 5% for the rest of the 30-year loan, which is pretty good with the 7-year mortgage rate. Around 3/4 of builders recently used rate buy downs that covered entire 30-year mortgages, according to John Burns. Does this, I've said this a few times, is this still the best way to buy a home if you're going to do it? Just to build and get a buy down from a builder?
Build, baby, build.
That sounds right to me. You making plans over there?
I am. So sorry, so I'm going to opening night of the Knicks on Friday, and we play the Pacers at home. And Friday night is also the World Series. So my friend keeps texting me about, are you down to swap our tickets for tickets that are higher up in Madison Square Garden but have a view of a TV so that we can watch a Yankee game? So he keeps texting me, so I apologize. Yes, I'm texting it back. Sorry.
All right. This is from the Wall Street Journal. Home purchase mortgage application index. And in 2020, it's really high. 2019, 2018. 2023 and 2024 are way, way low. And we haven't gotten much of a spike. Actually, things have fallen even as mortgage rates have fallen. My take here is that this is bad. And I can't believe we haven't had more like ramifications from just a lack of activity in the home purchase market. There's just like no activity going on at all. And I think rates are gonna have to get to like 5% for this to actually move the needle.
Yeah, well, how's that happening?
I don't know. All right, here, this is also bad. So this is from Freddie Mac, and they do like a state of the economy every month, and they said renter households between 25 and 44 of age earning at least 75 grand, inflation adjusted. And this was 1 million people in 1984. Now it's 3.3 million today. And look at the jump since 2015-ish. So tons of people in that 25 to 44 range. Again, inflation-adjusted earnings of 75 grand early. There's just people who are being priced out of the home market. And this happened in a hurry.
It's awful.
Yes. I guess this is, I don't know if this is a positive or not, but this is from Lance Lambert. 25% of mortgage borrowers have rates above 5%. So obviously 75% below. But look at this. There's only 22% of people that have less than 3% and 35% that have 3 to 4%. So we're talking 55% of people have below 4%. So it's widening out a little bit for people who have 5% and above. It's almost 50-50 now. So it's like slowly but surely people are working their way up. And I think as we whittle down that 3% mortgage, like that's going to be what unthaws this stuff for people and has some more activity. And people not just sitting on their 3% mortgage. I hope.
It's not good, as I say.
No.
All right, let's do some great quarter stuff. So Netflix, stock that I'm up 100% on. No big deal.
You never sold?
I never sold. No, I bought it. I sold it for a healthy profit, and I bought it back.
Okay.
In Q3, revenue grew 15%.
You Isaac Newton'd it. Remember, he bought South Sea shares, sold it, and got back in. But it's the second time they got him.
Yeah, but he bought. Yeah, and then they crashed. All right, so revenue up 50% year over year, operating margin 30% versus 22% last year, which is insane. Ads membership was up 35% quarter over quarter. And they think they said that, I don't have this in the notes, but I think they said that 50% of signups are now choosing the cheaper version. UCAN, the US and Canada, which is their most mature market, saw a 60% year over year increase in revenue, which is kind of wild. Like their most mature market. 10% and 5% growth in average paid memberships and average revenue per member. Engagement on Netflix, they say, is around 2 hours per day. That sounds high, no?
Wow. Yes.
So they say that for the full year, they expect $6 billion in free cash flow. So I think the market cap is like 350 billion, maybe a little bit more. Sounds pretty expensive.
330. Their stock chart is unbelievable. Over the last 5 years, inclusive of a 75% drawdown over the last 5 years, the stock is up 180%. Just an insane move. And obviously way back at all-time highs again.
The stock is feeling a bit rich here. I don't want to sell winners, but I don't know. I might sell this. So look at this chart from Alex Morris, Netflix trailing 12-month EBIT per average paid subscriber. And if you're listening, it's just up and to the right. I mean, they are absolutely dominant, but like the game is over. And of course it's reflecting the stock price. Like, as I just said, like it's $6 billion in free cash flow for the year. And it's a what did you say, $1 billion market cap?
330. So I'm not saying Netflix is going to drop 75% again. It feels like everyone's done the victory lap. Isn't there going to be a time in the next 5 years where everyone goes, oh, Netflix is done again. These other streamers are coming up?
I don't think so.
Are we over that?
No. That shit's over. They won.
All right, it's possible. I guess if they had football, I'm willing to concede. But.
Well, they did, no. They have Christmas games.
Okay, yeah, I guess so.
Dude, they won. All right, Amex, total billed businesses, goods and services has been hovering between 5% and 6% for the last 5 quarters, but travel and entertainment is coming down. So this is from Q3 to today, Q3 of 2023 to today. 13% there's year-over-year growth. 13%, 9%, 8%, 7%, 6%. So that's coming down.
So someone emailed us from Australia about the fees, the convenience fees from last week, saying the government announced they're threatening to ban surcharges by 2026. It's just at the look into point, but they say Australians lose $4 billion a year to these fees. And they said that Visa and MasterCard threatened to remove scam and fraud protection if that occurred. So that could be like the use case of they could actually test us out if they got rid of those fees, those 2-3% surcharge fees on credit cards.
All right,
which
so
just seems just so egregious.
It's ridiculous. So U.S. consumer services build business. Okay, check this out. So we speak about this every time American Express reports. Millennials and Gen Z, year over year, 12%. Percent of total, 33%. Gen X, 37%, only 4% growth. I'm not sure that's so interesting that millennials and Gen Z, their growth is growing. Their spend is growing so much faster than Gen X. I'm not sure what's up with that. Baby boomers, no growth, 0% growth, 30% of the pie. So to your point earlier, Ben, about millennials and Gen Z carrying shit, you know the Paul Rudd meme? You ever think we'd be here?
Nope.
All right, almost lastly, commercial services build business. No growth here. 1%.
What does that mean?
I guess this is like business spend.
Oh, okay.
No growth.
Aren't Visa and MasterCard way bigger than Amex though, as far as usage?
It's different businesses, but yes. But business cards, it's Amex.
Okay.
And then look at their credit metrics. We're talking about like credit cards that are 90 days past due. I guess maybe it's a different cohort because American Express tends to be a wealthier, more affluent customer base, but nothing to speak of here.
Numbers seem low to me, yeah.
Nothing to speak of here.
All right, we talked about the inheritance thing last week, and someone sent us a comment that was a follow-up. It was what is wrong with our parents? Why don't they give us more money? I wrote a blog post about this. I got a ton of feedback from baby boomers, especially. A couple from like younger millennial people saying, hey, but a lot of baby boomers, a lot of them had the sentiment of, listen, like we grew up with a scarcity mindset. Our parents were in the Great Depression. That's one of the reasons we're hoarding this stuff. We're worried that we're going to run out of money, right? So there was a lot of that mentality. I heard from a few people being like, listen, our big thing is we're going to spend on travel and family trips. So every year we're taking the kids on a cruise or on a trip to Mexico or Hawaii or something. And that's like our thing. We're going to pay for all the travel. I actually like that one. Like spend your experiences together.
You know what resonated with me? Somebody said, my perception, which could be inaccurate, is that there's some entitlement in the millennial writers' comments. If I detected that in my kids, my response would be, your mom and I worked for 40 years. Okay, that's not what I was talking about. I guess the comment was like, I don't want my kids knowing how much money I have because it's going to demotivate them.
Yeah, there was a little bit of that too. Right.
So to me, that makes sense. But somebody emailed us a post on Reddit. And this person said the original poster, because I said to you last week, I need more context.
Yeah, we don't know
What if this kid sucks? He's like mad at his parents. What if he sucks? And somebody wrote the original poster. Now, I don't know if this is true or not, but take it, let's just assume for this argument that it is. The original poster is a car head and is dropping tons of money on his big truck Ram 1500 hobby shit on a credit card. Also doing full room house renovation on credit card debt. Also did a bunch of crypto mining shit that obviously didn't pan out. If the base habits that got him $20,000 in credit card debt aren't fixed, they can pay it off monthly and he'll just end up back at square one. His parents likely paid off his cards multiple times and he just racked up more debt. So again, assume this is true. This kid's an asshole. Why should his parents help him at all? It sounds like they're doing plenty for him.
Yes. And my only thing would be, if you have young people right now who are looking to buy a house, helping them pay for a down payment that's an investment that you make in your kids these days, if you can. That'd be the one place where I'd say, as a boomer, like, you should step up to the plate if you can help.
But I know this is happening all across the country because we see it in the data. That
it doesn't seem fair.
But yes, but let's say that you are able to help your kids out financially. You have great kids. They're hardworking. They're responsible. They're trying to raise a family. They're doing all of the right things, and they just need help with the down payment. Like, what, as a parent, what could be better than that? If you have a child who's not ungrateful, who's not always has his hand out, and you want to step to them and help them out, I think that's like a beautiful thing. To me, that's what money is for.
Yes, I totally agree. And it's unfair that certain people don't have that help from their parents, but if you can, I think that's the place that you help today.
So, Ben, you wrote in here the worst part about switching from cable to YouTube. What's wrong with it?
So I'm, I don't know, a month into YouTube TV full time. I got rid of cable, I mentioned. Two things that are bad. The first is you can't channel surf anymore. It takes way too long.
Ooh.
So that's the part I don't like. You can look at the guide, but it takes a while for it to cycle through and to change. And YouTube does kind of know your habits, so you kind of get in. So especially sports, I like the ability to see the four screen and stuff, but if I want to go from game to game to game much quicker, it's not as easy. There's an extra step that takes too long. And the commercials on YouTube TV are 10 times worse. Like, obviously it's election year, so that doesn't help. But all I want is a few jingles that'll be stuck in my head all day. Like, you don't get those commercials. You get like.
Are you having switcher's remorse?
No, I still like it. There's nothing that I miss besides these are just I'm nitpicking here. The commercials are awful. My kids are like, I hate elections because that's all they see is on YouTube TV is just election commercial after election commercial after election. So my kids are like, we're done with elections and we don't know what it is.
Ben, you shared a picture with me, Duncan, and some of the gang, a picture of you failing to crack an egg on the flat surface. I don't believe you. What did you smash the egg?
I did it twice. Well, you sent us the video of the guy dropping it and smashing it, right? He dropped it and it broke in the middle and the crack worked, but then it left remnants of the yolk on the counter.
What did you do?
I did it twice, just like the video you showed me. I did exactly what that guy did.
I didn't. No, just hit it a little bit. You shove your thumb up there, and it breaks out so nicely. But anyway, funny. I'm
done with egg talk. I do it on the side of the pan.
Last thing, the day after we were talking, I grabbed an egg out of my refrigerator. I opened my cabinet to get a bowl. Look at this picture. Somehow, I just smashed the egg right against my countertop by accident.
Ew,
yolk everywhere.
Gross. Nice.
All right, let's get to recommendations. So I was on an airplane coming to San Diego, and there's a dude that went to the bathroom with his socks. What are you doing?
Oh, shoes off on the plane?
What are you doing?
That's a big no-no too. Oh, that's gross.
Okay, I watched First Man, the Ryan Gosling movie. Actually, great cast. You ever see that one?
Yeah, it's a weird movie.
Okay.
Didn't you think it was kind of weird?
So, I think I have to revise my take a little bit on my no drama rule on an airplane. I would say specifically a drama that's longer than 2 hours. because if I watched this at home, I probably would have turned it off I probably would have given it like 20 minutes. Pretty slow. In fact, very slow. But for the story that they were telling, which is Neil Armstrong, it had to be slow and methodical because there was a lot of character stuff. So I was able to get through it, and I quite enjoyed it within the context of the airplane ride.
Okay. I remember not liking this one when I saw it.
Yeah, because it's not a great movie.
Yeah.
Like it's pretty boring. But on the airplane, I think it worked better. All right. I was watching The Bike Riders. Probably got 40 minutes left. It's a weird movie. So to me, it felt a lot like A Bronx Tale in the sense that like it's kind of like gangster stuff aside. It's like an enjoyable movie. It's like pretty good, but it just feels
First half probably better than the second half, right?
okay. It just feels like weirdly hollow. Like
there was just something off, but I liked it.
Yeah, like Tom Hardy's accent was horrible. Michael Shannon's character was weird. Like the whole thing just feels. I'm probably not articulating this well enough, but it
should have been better with the cast, right?
It should have been so
and the
much
subject
better.
matter. Yeah.
So to me, it felt like a Bronx Tale. All right, lastly, actually, not almost lastly, why can't Elon Musk with Starlink make like better internet on the airplanes?
That is a good question. Not to be the guy who complains about Wi-Fi on an airplane, but I hate when I pay for it and then it doesn't work. Like I should get an immediate refund if it doesn't work, right?
Yeah, it just seems odd to me. All right, lastly, Alien Romulus. I don't know what's going on here. They're making a VHS out of it. It's because like the 45-year celebration of the original one. I guess they're making like a limited number. Who's buying a VHS of anything? What are they doing?
So collectors are buying it and they're never opening it and keeping it for a collector's item, I guess.
I mean, it's just odd.
It does seem weird. All right, I got to do one story time before I get into. I don't have much recommendations. You were talking about coaching earlier, and I saw this piece. So I watched the Texas Georgia game on Saturday night, and there was like a really bad pass interference call, and they went to look at it in the review booth and stuff. And as they did, it was a terrible call, and it was a interception that seemed like it was going to swing the game. And then the fans threw a tantrum and started throwing beer bottles onto the field, and then it made the refs change their call, which was crazy. And Jason Gay wrote about this in the Wall Street Journal.
What do you mean? It made the refs change their call? Like the refs,
they called the penalty. They said pass interference, and it was a terrible call. It should have been called, and so that was going to negate the interception that the guy had the interception all the way down into the side of the 10-yard line. And they threw all these bottles on the field, and then the refs talked about it, and they said, "All right, you know what? No penalty. We're giving it to Texas." And Jason Gay wrote about this, how it's like we are a tantrum nation. Like we throw temper tantrums about everything. And he was saying, like, it's kind of funny that, like, this temper tantrum from the crowd actually worked, and it got the refs to change their call. And I was thinking about this because we had a huge temper tantrum with a coach this week at a girls' soccer game. And I've seen a few of those this year. We had one in flag football against the team we were playing. My daughter, Kate, is 7 years old, and she plays on a soccer team. And it's club soccer, but it's 4-on-4. It's these girls, kind of like the boys with flag football. If they're paying attention half the game, you're happy, right? But this coach of the other team was going just insane the whole game. And there was two girls were running for the ball. They ran into each other. One fell down. The other girl didn't. And our girl was the one who kept standing. And she went in and scored a goal. And this guy lost his mind. The ref was probably 12 years old, you know?
Oh, God.
And the guy wanted a foul because it was a 1-goal game. And the guy lost his mind. He's screaming at the ref, just berating him. This kid's 12 years old. It looked like he was going to cry. And I almost wanted to get involved. And so this guy, and again, this is 7-year-old girls soccer. They're playing 4-on-4.
And you're the other coach?
Oh no, I'm not coaching. I'm just on the sideline. Okay. And I had to go up to the ref after the game and be like, dude, don't worry about that guy. Take it. You're fine. Our coach after the game, he went up to the guy. He's like, hey man, just take it easy. There's a 7-year-old girls. What are you doing? And the guy goes, it was a 1-goal game. Like he wanted to win this 7-year-old girls soccer game. So he threw a literal temper tantrum. The worst part is we had to play the same team again the next day. And it was kind of like after a night of heavy drinking and you said or did something you're probably embarrassed of. Like he kind of had that feel and he was much quieter the next day. But just, I can't imagine getting that. Seeing those kind of things happen always makes me like just zip it up whenever I'm watching my kids do anything.
But there is an interesting life lesson here because it's funny you mentioned this because I had a very similar experience. And I was thinking like, the squeaky wheel gets the grease is one of the takeaways, which is kind of annoying, but it's a reality of life. Like if you don't ask, you don't get. So, all right. So I am also the sideline coach for Logan's flag football. They're 5. So I mean, they're 5 years old. They're babies, right?
Right.
And there's 14 kids. So there's always 7 kids on and 7 kids off. And we're always rotating. And one of the kids was off and he's standing next to me. And the mom comes up. I don't know these people. The mom comes up to him and she's saying, and she's talking basically to me through him, right?
Right.
Now, mind you, it's obvious that I have nothing to do with what's happening here, okay? Yes, I wear a Coach t-shirt, but I have no influence on what's happening. So she's talking to me through him. Okay. Do you want to come off the field? This is your 3rd time off the field. Do you want to play? And then she goes, excuse me? And I'm like, yep. She goes, are you a coach? And I'm like, and I point to my shirt. I said, yep, technically I am a coach. She goes, he's been off 3 times.
Ugh.
And so I walk onto the field and I'm like, hey, to the other coach, don't turn around, but his mom. And I'm just like, they're 5. Everybody's shuffling in and out. Just what are you doing? And I guess to her credit, he did get the ball. She said thank you to me, which is the right thing, of course. But it's just like,
don't be that person.
These people. But it's f***ed up because she got what she wanted.
Right. Luckily, this guy didn't get what he wanted. But yeah, it's bad. All right, I've got a couple short recommendations. I started watching Disclaimer on Apple TV. This is Kate Blanchett.
I've heard multiple good things. I want to get involved.
I don't think you want to get involved in this. This is a no, Michael.
Really?
This is a no from me. It's 2 episodes in. It's either going to be the thing where it's a miniseries where it's done and you go, or it's done and you go, oh, okay. Very well. Kevin Kline's in it. It's very well acted. Pretty slow paced. It's like a mystery. You don't know what's going on kind of deal. Something happened when they were younger.
Big Kevin Kline guy.
I love Kevin Kline too.
I'm going to stand on the sideline and I'm going to wait to be called in. So
wait
if you
till it's
tell
done.
me, thank you.
I think this could break either way. It's good, not great so far. And then I got a rom-com on Amazon Prime that I haven't watched in forever. It's called A Lot Like Love. Ashton Kutcher was throwing heat in the early 2000s, you know? Amanda Peet.
Yeah, he was great. I never heard of this. Who's the counterpart?
Amanda Peet and Ashton Kutcher. And they do a great job. It's like people who come in and out of their lives for 10 years and they finally get together at the end. And, spoiler alert. In a rom-com, they actually get together. But they do a great job depicting the .com boom and bust. Like he gets involved in like a baby diaper company that goes under or something. And just a quirky little cute rom-com, but I've always kind of liked it.
All right, listen, it's not rom-com season yet. Give it a month, Ben. It's still Halloween season. And to that end, I forgot. I was watching the new VHS Beyond, which, Ben, I'm sure you're not familiar with, but it's a great franchise. It's found footage, horror, sci-fi, and Robin sneakily likes this shit as much as I do because it's found footage and there's like, I don't know, 6 to 8 stories per movie. And she watched the first one. She's like, what is wrong with you? I was like, you like it, don't you? It's pretty good, right? So VHS Beyond. I only saw the first 2 skits, but I don't want to call them skits. First 2 stories.
So she's probably she hates herself for liking it though, probably.
She likes it.
Okay. All right. We didn't mention you're in California for Stock Twits right now.
We did mention it.
Did we?
I'm at Stocktoberfest. Okay. This is Hotel Coronado, Hotel del Coronado, whatever it's called. My favorite hotel that I've ever been to. I absolutely love it here. It is spectacular. Really great place.
Okay. Enjoy. Remember, check out the Unlock. That's advisorunlock.com. Sign up here for a financial advisor. Thanks to the
come work
team
with
as
us.
Always. Yeah. Check out the emails for coming to work with us. What's the email again?
hiring@redholtzwealth.com, or there will be a link in the show notes. We're looking for advisors in California, tax people in Philadelphia.
We've hired multiple people who've emailed us through Animal Spirits before. I had a conversation last week. One of our new tax people said, hey, I came to the Animal Spirits email and got hired. Email us, animalspirits@thecompoundnews.com. We'll see you next time.